Okay, hey everyone, Mark here. Mark Pre-Markets, thanks for joining me for another Bitcoin video analysis. All right, so we got a lot to go through here. Thanks again for joining. If you're new to the stream, this is how it works. If you have a question about a stock or an altcoin, please share it in the chat now. I see quite a few people have put it in the chats here. Let me move this over here. Hold on a second. Okay. And there've been quite a few people that put questions. So now's the time to put the questions in. First thing I'm going to do is talk about the economic calendar very quickly. Then we're going to get into the Bitcoin chart and what's going on here. All right. Now, again, what's going on here should not be a surprise to those of you that have been following me for some time. I mean, every report that I've been writing on TradingView has been nothing but bearish for weeks. This is just the lower low playing out. Okay. So anyway, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. And let me take that slide away. No need to see that. Okay, hold on. There we go. All right. Now you guys should be able to see, should be able to see me. Let me fix that there. There we go. That's better. Okay. So so you see the Bitcoin chart. Now, before I get into the chart, let's talk about the economic calendar real quick because today is Monday. All right. Hey, everyone. Let me make sure TradingView is working over here. Let me see how we're doing over here because that's where things can get funny. All right. There we go. All right. All right, TradingView people. So now would be a good time to put your questions in. All right. So let me just say hi. Who do we have here? My regulars, right? Hey, SD Trader, David. Good to see you. Julio. All right. We got Mr. Plow, Wedge. All right. Alex, Kim. Yeah, good to see you. Armin, Winterfresh, my Romanians. Peter, all right, cool. Good to see you all. Kai is here. Steen, all right. Will from London, cool. Got the regular crew here. All right, so first things first. Let me move my microphone. Hold on a second. Okay, that should be better. All right, now, economic calendar, first thing. Again, I'm just going to talk about the most important things. We have a couple of things this week that are most important. On Wednesday is the first one, which is what, the 15th? We have the FOMC meeting, okay, and the press conference. Next to NFP, that's probably the most important economic event, interest rate decision and their press conference. Now, again, they're expected to raise rates. That's priced in. So don't make a big deal out of that. The market knows about that. What the market doesn't know about is what they say at the press conference. Now, we had a bad CPI number on Friday, right? So that got the market, that turned the market red. Because obviously it means the Fed is probably not going to be loosening anytime soon, right? I mean, that's the what the market starts pricing in. So if there are any surprises at the press conference, that's where you could see a dramatic move one way or the other. There's no way to know in advance, okay? So all we can do is control risk by being prepared for a range expansion. So something to keep in mind there. On Thursday, on the 16th, we have the Swiss National Bank, and we have the Pound, the Bank of England. They're both going to have their rate announcements as well. Not as important as the FOMC meeting because they're not the world reserve currencies, but they can affect those Forex pairs if you're in anything, especially, any pound crosses or anything cross the franc, okay? So if there are any surprises, most of the time, these other rate announcements are non-events, but you have to be prepared for a surprise. Just in case, right? That's the whole idea here, being prepared. And then on Friday, there's another important number. What was that? Well, Bank of Japan has their interest rate announcement in their press conference as well, right? So, I mean, those are the main things that are scheduled for this week. And, any yen crosses can be affected by that. So pay attention to those reports if you're in any of those Forex pairs. Otherwise, it's all eyes on the FOMC, okay? And the market may be pricing something in here in advance. Maybe the market knows something. Have you seen the bond market? How many people here have checked the bond market chart? How many? I'm just curious. Just let me know. How many people here have checked out ZN1 before I just asked you? Because you should be looking at that chart every day. All right, not to trade. I mean, everyone wants trade ideas and everyone wants to make money right now. But that chart right there is a very important piece of information because it's the one component of the macro view that can give you a lot of insight as to what is reasonable in this environment. People have no clue how to trade a bear market. Okay, we are clearly in a bear market. We're seeing that all over the place. Okay, there were plenty of warning signs, and people are clueless. They would rather give in to hope, and they'd rather give in to fake gurus and all the other nonsense of them promoting, oh, the market's at the bottom and blah, 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 and thinking, oh, I got a good price, right? Bitcoin's at 35K and that's the bottom. Obviously not, okay? The first thing you need to pay attention to is not the price level, because everyone wants like a precise thing. Oh, is it going to bounce right here? And, you know, people are bearish right now because they're all reacting to this, which is normal. That's human nature. But I'm telling you, as soon as a green candle shows up, they're all going to be bullish again, right? Oh, Bitcoin's going to bounce here. We're going to see 50K by next week, right? All that nonsense because of one green candle. Same with the bonds. Oh, green candle in the bond. The bonds must have bottomed. No. So it's important to understand that macro view. If you don't have a good grasp on that, you're going to just have problems, all right? Like, don't even bother trading because you need to understand what's realistic and what is not, and where the markets are vulnerable. This Bitcoin situation, I don't know why anyone would call it a long on a swing trade or even like an investing level with larger size if Bitcoin is below 34K. Okay, that was a lower high resistance. So let's get into Bitcoin here. Let's talk about the potential scenarios for the week, right? I mean, that's like the main point of the stream. By the way, make sure you read my TradingView article. I wrote that article yesterday, and I got very small views relative to what I'm usually getting. Again, either people don't care about bearish reports on Bitcoin. Maybe it was my title was poorly chosen. I don't know. I mean, you know, I put 25K test, 22K possible. What's today's low? Today's low is 22,600. Okay, I wrote this yesterday before all of this. I don't know if anyone paid attention to it, but it was all based on that break of 28K and the close. Okay, and obviously it closed below 28K. I mean, what was yesterday's close? 26,555. Right? I said if we closed below 28K, 25K is highly likely. That's what I wrote in the report. You can go read it. And we went right through it. Now, I said if we go through 25, 22K becomes the next area. As you can see on my chart here, I have a zone on the bottom of my chart. These two lines. I don't just randomly draw lines on my chart. These lines are very meaningful, okay? And these are the lines. This is the chart that I published on TradingView. This zone between 20K and 22K, that's the next support zone. So if this thing is going to have a type of short-term bounce, this is certainly the location where that bounce is highly likely, but you can't step in front of it just because of that alone, because just like 25K, this thing can clean right through it. It's possible. Everyone wants like a precise, you know, when is it going to happen and what's it going to look like? There's no way to know. All we know is the general area here is highly probable, but you can't step in front of it because you have to respect the risk first. The risk is it cleans through 20K. Now, 20K is a very important level. All right. Now, let me show you why. 20K dates back to the peak of the wave one, the broad wave one that, you know, started this nonsense out many years ago, what, 2017. Look at this. This is the wave one peak. See that right there? So that's 20K, basically. If price goes below that number, which is possible, then the reason why that's important is because it cancels out the large impulse wave, okay? So someone had sent me a message, freeloader sent me a message asking me if, you know, what would change, where do you start counting again if wave four, you know, bottoms out? Like, where do you start counting? Where do you begin your wave count? Well, first of all, if wave four, we're still in this wave four, if you want to look at it from that broad Elliott wave point of view. If this thing crosses below 20K, I'm not talking about like, you know, 20K and a half or 19 and a half. That doesn't really count. It needs to be decisive. Like, we need to see like 18 half. If you see something like that, that's pretty clear. Now, if you see 18.5 and it reverses like right away and the next day it's back at 20K, then that's not really going to count. But if it goes to like 18.5, closes there and stays there, and it's working its way lower with no bounce in sight, if you see something like that, then it's broken. Okay. And if it breaks like that, then the impulse structure that wave 3 basically peaked at 69K, that whole thing gets canceled out and has to be relabeled. Now, people don't like counting waves for that reason, because of this relabeling thing that happens on small time frames all the time. But for such a large magnitude, it's a pretty important thing, because what that says is Bitcoin is not in a bullish trend. Okay. I'm talking about big picture. So anyone that has dreams of 100K anytime soon, it's nothing but a dream, especially if that happens. And what that could mean if we break that level, what it could mean is the move that we saw to 69K, that move could be just one gigantic wave 1. And this correction that we're seeing could be a large magnitude wave 2. If that's true, I mean, again, we don't have the evidence of that yet, but if that's true, wave 2 theoretically can test the bottom of wave 1, all right, before the next wave starts to develop. The bottom of wave 1 on this Bitcoin situation is like, what, 1,000 or something like that, or sub 1,000? It's hard to believe that that can happen, but that's what the wave count will point to if 20K is cleared. So keep that in mind. I'm not making a prediction here. Okay, what I'm going by is objective evidence. All right, objective. A lot of people here are not objective. They rely on emotions, on feelings, on fake gurus, on all this other nonsense. Or they come up to me, oh, tell me about Bitcoin dominance. You're wasting your time with all of that stuff. It's just nonsense. Look at objective components, right? What's objective? The macroeconomic view. Interest rates rising. That's objective because they're rising, right? Have you seen, I asked people before, have you checked the bond market? I looked at the bond market. This is the bond market. That's the 10-year note futures. Does that look bullish to you? All right, people back here, oh, the bond market's bottomed. Everything is going to get better. This is not a bottom. Rates are rising. All right, so why the bond market's doing that? It doesn't matter. I don't care why. The fact is that it is. That's a lower low, which means a lower low after this is likely to follow, even if there's a temporary bounce until that changes. Keep in mind, a change in the bond market can take 3 to 6 months before anything meaningful changes, right? And we need to see the changes there first, not in the stock market, not in Bitcoin. Everyone thinks that, oh, you know, the stock market's going to bottom first or Bitcoin's going to bottom first. No, the bonds need to bottom first because that's where the party starts. People don't realize that all this nonsense that we saw over these previous couple of years, all this easy money was a result of the Federal Reserve easy monetary policy, the loose monetary policy. They created all that money. The money is gone, and the Fed is now on the opposite side. Okay, so as long as that's the case, I don't see there's nothing that's going to hold this market up anymore because that was all that was the catalyst. Okay, unless some other catalyst comes along, but where is that speculative money going to come from? Money needs to be cheap. Money is not cheap, and it's getting more expensive. That's what the bond market's saying. Okay. So, so as far as Bitcoin goes, right, and as far as potential setups for this week, it's possible that we can see a reversal here, perhaps a bullish pin bar or something like that. And I know many of you are going to get excited, and you're going to ask me, is this a trade? Well, if we get the reversal in this area, it's a short-term swing trade idea potentially, right, with very limited potential. Okay, if anyone thinks it's going to run back to 30K, right now, this old support at 28K is going to be a resistance area. So that's going to be where your expectations need to be capped. Forget 30K, forget 34K. That's out of the picture now. Okay, 28K is the new resistance because it's the old support. Possibly 25K, but 25K was a pin bar. So there's a lot less. It spent a lot less time there, obviously. It spent more time bouncing off of 28K. What does that mean? That means there are a lot of longs at 28K, probably more longs than at 25K. Those longs are going to be happy to break even because it's human nature. So you're going to see selling pressure, okay? You're going to see selling pressure develop in this area here for that reason, because people are going to be happy to get out to minimize their loss or reduce their risk. The smart ones anyway. So keep that in mind. That will also be a potential area for a new short. Now, is that all going to happen this week? I doubt it. It's going to move that quickly. Anything is possible, especially with the FOMC on Wednesday, but those are the setups to look for. Now, you have to decide what side, how you want to work this and what kind of risk you're willing to take. If we get the pin bar here, it doesn't mean that it's going to follow through. All right. Pin bars fail all the time. And you also have to be quick to take your profits. That's why usually if I send anything out, I'm not sending anything out on Bitcoin. But even if I see that set up, I'm not going to send that out because people can't handle it, number one. Number two, one-to-one reward risk. So if this thing is basically showing a risk of 2,000 or 3,000 points, which is typical in this environment, if you can get 2,000 or 3,000 points on that swing trade, then and you're at one-to-one with your reward risk, that's usually where you should take your money, start taking your money off the table in that scenario. Otherwise, stay away from the longs. The only other way to play this market is by day trading. And I don't recommend people day trade if you have no experience, because if you can't put these puzzle pieces together on this time frame, the smaller time frames are even harder because they change so much, and you have to be prepared for those changes. I mean, if you can't handle it on this time frame, don't even think about it on the day trade time frame, because you will wipe out your account, because this is what happens. You get tired of getting stopped out, so you're going to hold on for the bigger move, and you're going to get caught in something that has much more risk than you thought, and that's what leads to wiping out the account, especially when there's leverage involved. Do not day trade these things. All right, that's really more for people with a lot of experience, and even then, it's not easy. Okay. So the aggressive thing, wait for the swing trade long if it comes along, if you want to be aggressive, and take your profit quickly if you can get it. The conservative thing, wait for the next short setup, okay? And see if you can get the lower low from there. This thing may go into a range. It may consolidate for a bit, just like it was consolidating back here and getting everyone long again, thinking that this market's going to rally for some strange reason, when this is a highly speculative asset and there's no reason for it to have any sustainable rally until free money or cheap money comes back to the market. I don't see any of that even beginning, okay? So no cheap money, no reason for these to rally. These are not real assets, okay? Somehow they brainwashed everyone into believing that Bitcoin and altcoins are real assets. They're not. They're speculative. They're like penny stocks, and people don't want to accept that. Okay, a real asset is Intel. A real asset is Walmart. A real asset is Amazon, right? Those are companies that are reliable and produce products and they make real money, okay? And they suffer in a bear market as well. But those are assets, not this. This is a gamble. You have to think of it that way. All right, so that's my Bitcoin rant. Let's get into your questions. I want to get into these. I started a little bit behind today, so let me catch up on these questions. So now David asks me from Northern France. All right, welcome. I'm curious about your take on XMR. Okay, Monero. Next major support at 109. One of the most reliable coins. Okay, so let's pull it up. Right, XMR. Now, the thing is, that's not a very healthy opinion to have. Reliable coins. It's an altcoin. All right. Reliable, like I just said, reliable is Walmart. That's reliable. Amazon's reliable. Intel is reliable. Monero is just an altcoin. So maybe relative to other coins, but that's like comparing garbage to garbage. Like why there's nothing reliable about this coin. If Bitcoin is going to suffer and break 20K, they're all going. Just because they're at support levels. Now look, support levels are good. This is a support level. At least you're not buying the high, okay? You have that, but the environment does not favor these. So the supports are likely to break. So it doesn't matter if it's at 109. It doesn't matter. Bitcoin is very weak, and Bitcoin should not have broken those supports that it broke if it was going to remain strong. In fact, Bitcoin is respecting resistance levels. 32 to 34 was a resistance level. It clearly respected it, and now here we are at the new low. These are going to do a similar thing. So if you're thinking of investing in these things, just be prepared for much lower prices. So just like in my analysis that I wrote for TradingView, I said, I don't want to discourage people from investing at low prices. There's nothing wrong with that, but just understand the environment is not favorable. So there's no reason to be aggressively investing. You take small bites, money that you have no problem watching getting cut in half, because it can happen. Again, people want a prediction. This is not a prediction. It's a risk that you must account for. It can happen. Will it happen? No one knows, but it's possible. So if it's possible, you need to account for it, okay? And what I'm saying about something like Monero, here you are at this support level. Great. No buy signal in sight. Bitcoin broke supports. You have a lower high right here, just like Bitcoin, 34K. It's the same deal. Lower high, okay? This thing is likely to make the lower low. So if you're interested, forget swing trades. That's not even a consideration, okay? I mean, that's again coming from objective information. I don't care how great they are. I don't care about the white paper. I don't care how reliable they are. It's all meaningless in this environment. Everything begins with the macro and the Fed. And as long as they're against these things, which right now the environment is, they're all in the same boat, okay? At some point, they'll come back. I know what I'm saying is very pessimistic and it's very discouraging, but I'm just giving you the reality here. Not like all these fake morons who just push hope on people. All right. If you like hope, you're not going to find it here. Go listen to another, moron who's just trying to generate leads and sales and whatever they're trying to push on you. Okay. This game is the most deceptive game, or the most deceptive business probably in the world. This is worse than used cars. At least with a used car, you're getting something that you can drive for a little while. They're just selling mindless fake ideas, okay? So again, if you want to invest, small bites, and do it in a scheduled manner, once per month, whatever, okay? And if this thing gets cut in half, you're okay with that, because that's likely to happen. That's what I have to say about these supports. Again, there's nothing wrong with buying lows, but you're not doing it in an environment that's friendly. Keep something in mind. People, where's the low? What's the low going to look like? When should we start buying? Because, you can have situations like this that can fool everyone, okay? Something like that. This rallied in an environment that was getting worse and worse and worse. But of course, it sucked everyone in. Now, the macro view will start to change first, most likely, meaning the bonds. And as they're changing, it's not a one-to-one relationship. Remember what I'm telling you here. It's not a one-to-one relationship, meaning the bonds may stabilize and these coins may be pushing low after low after low. Just like when the bonds, where they turned negative a while back when no one was paying attention. I was, of course, and I was mentioning it. But the stock market was making new high after new high after new high after new high, completely ignoring the change in the bonds. It took a number of months before it all caught up. It's the same story with the bottom, okay? So I would be looking for stability there first. There's none. And while that thing starts to become stable, these things are likely to be pushing lows, and everyone's going to be extremely bearish. When you see that change in the bonds, right, and you don't see the change here in these garbage coins and Bitcoin, that's the time to probably get a little more aggressive with your investing, meaning maybe a little bit larger, okay, at that time, anticipating that a turn is coming. And then when the turn starts to develop on the charts, now you'll have a nice average price and you can continue to add as your schedule permits, okay, and as the amount of money that you've allocated toward that, as you're putting that into the market. Does that make sense? Okay, so that was a long answer for that one question, but it was important. All right, so let's move on here. What else we have here? Okay, just going through the chat here. Let me jump over to TradingView. I see a lot of stuff going on over here on TradingView. Thanks, people, for putting your questions in the chat. Let's see what we got here. So Nader, thanks. Okay, no problem. Please talk about longer term investment, Bitcoin and ETH. All right, so I pretty much just talked about that, right? I mean, in Monero, it's the same deal. Bitcoin is the same deal, all right? And you're looking at support levels, and they can break, right? And they're likely to break until we see a change. And if you want to invest in this, you're stepping in front, like I said, small. How low can Bitcoin go? No one knows. You're going to see in this environment, after a move like this, you're going to see a lot of predictions like Bitcoin's going to 10K, Bitcoin's going to 5K, blah, blah, blah. You're going to see a lot of exaggeration because they're incentivized. Like whenever I read articles about marketing and writing articles and stuff like that, they always say, write a compelling title, write a very exaggerated and compelling title to get people's attention. Why don't I do that? Because I want you to have the right expectations for what you're about to read. What should I have wrote in my TradingView article? Bitcoin's going to zero. Click here to find out why. Should I have written that? That would have been pretty much a lie. My article was nothing about going to zero. All right, anyway, but that's how the industry works. So yeah, that's the story. And Ethereum, again, is right behind it. Ethereum is number 2, as we all know. And whatever Bitcoin does, Ethereum is going to do. So use Bitcoin as your gauge. I've always said that, and it's still true. All right, let's see what else we got here. Hey, from Germany. Hey, welcome. All right, no problem. Do you have an opinion on European Central Bank's rate decision? Right, okay, so that was interesting. The ECB had their rate announcement on Thursday, okay, and the euro got hammered. I don't even know what the ECB said, but I looked at the chart. All I had to see was the chart. First of all, if you look at watch my previous reports, I've been bearish on the euro. I've talked about, euro as possible shorts and this and that. You can just go back and watch the videos. I've talked about that. People have asked me about the euro before. That was based on the chart. Now, I knew their announcement was coming, and then I saw this. Man, whatever they said or whatever their actions were, obviously it wasn't good, okay? And this right here is basically, I interpret that as a sign of inflation. And they're not being aggressive enough with raising their rates or whatever. Maybe they can't, right? Maybe that was a story. I don't know. I can only go by the chart. But that right there is a sign of inflation. All right, lower currency, devaluing of a currency. That's what's going on there. So that obviously is going to lead to higher asset prices in European markets, typically as the currency gets cheaper, as we saw with the Turkish lira and all that other stuff. Okay, so those are things to keep in mind, but it's an effect of your currency with less buying power. So all I can say about it is I don't know what their actions were, but the currency reflects that they were either dovish or whatever, and the market was not happy with whatever their choices were. So going by the chart, you have a lower high. This is pretty bearish momentum. I'd be anticipating a lower low. Okay, what's the low here? 103.89. So you're likely to see lower prices. I mean, there's nothing bullish about this chart to begin with. Let's take a look at a weekly. I mean, look at this. This is euro on the weekly. Okay, look at this. And a lower high is established here in the weekly, you're going for the lower low. How much lower can this thing go? I mean, look how far back you have to go. You're basically at 2017 prices right now, okay, on the euro. And yeah, I mean, you have to go even further back to really see where your next supports are. I mean, man, you're going way back. Look at this. I mean, you're looking at, what is this price here? 101 something. So you're getting back into those really old support levels where maybe it'll put in a temporary floor on the euro. You have to see how it behaves there. Other factors can come into play that may change things, but right now, that is what the momentum is saying. Okay, so I hope that helps. I hope that answers your question. Pretty hard times ahead in Europe. Well, yeah, I mean, if they can't raise rates for that reason and they're trying to whatever, I don't know. Again, I don't know their situation. Yeah, I mean, Europe's going to be having problems. Okay, let's see what else we got here. I look at ZN1 every day. Dollar index also. Okay, cool, freeloader. Good job. All right, XLE. Let's take a look. That is what is that, the energy sector? The energy sector of the S&P? Yeah. Wow, that's an interesting little hammering right there. That's today's candle. So this thing has been, obviously, the energy sector has been very strong, thanks to geopolitical the situation and oil, right? So let's take a quick look at oil, WTI, USD. I think someone in here asked about oil. I mean, look at this chart on oil, right? It's been generally strong. We know there's been pressures on this, right, with the whole Russia situation and this and that. At this time, oil is at a potential peak. But even with that XLE pulling back, which I guess would be the group of stocks that are part of the S&P, that's a green candle on oil, okay? And that's an outside bar. I mean, oil is up. What is this here? Actually, let me pull up the correct chart. It's USD WTI. Okay. So oil is what? Actually positive today, still at barely positive, but it's at 120 a barrel, right? Now, here's the thing. This structure on oil is bullish. And yes, it's coming up to this peak, but there's nothing but higher lows here. So why is that more important than listening to news? Because people right away, they think the news is more important. Well, the news moves markets. No, the news is just a reflection of what's going on anyway. Usually it's just like an amplifier, okay? It seems like news is moving markets, but it's really not. It's just, they just tell you what's obvious most of the time. So you have to look at the price structure because that is more telling than anything else. And we have nothing but higher lows. So yeah, we're getting to this resistance, which could turn into a double top. I mean, you have the Fed trying to fight this with rising rates and all this other stuff. But even with all that fighting, this refuses to pull back. So at this point, I can only anticipate higher prices, right? Higher low often leads to higher high. Now, the change in oil, just look at the supports. What's this level right here? Basically 110, between 110 and 112, right? You don't want to use an exact number. You want like a little range of prices because, markets are messy. They're highly random. So price is going to have to probably take that area out before we can really get any type of negative move or bearish move on oil. Oil can pull back there, fool around, and then work its way higher. We have to assume that that's the case because that's the evidence that we have right now until something changes. Maybe the geopolitical situation cools off. Maybe we'll see a break in oil, okay? But until that's the case, we have to suspect that oil is pressured to go higher. Like again, with rising dollar, rising rates, and look at the dollar. This is the dollar index. This is the dollar making new highs, okay, which is inverse to the bonds. So that makes sense. With something like this, oil should be getting hammered, and it's not. Remember when we were here a few weeks ago, and people were like, "Oh, the dollar's bearish now, right? Then we can start buying everything else because things are getting better." What did I say? This is a higher low, most likely. It's not a bearish dollar. It's just a pullback. I mean, look at this. Straight to a new high. No hesitation. Just straight there. So, again, I bring up the dollar because with oil should be pulling back much more, right? Oil should look a little more like XLE, should look a little more like that. Not even close. So XLE, the way you have to treat this is higher low, pullback, looking for long, because this structure is nothing but long. So maybe you get that bullish reversal somewhere in this area, right? After maybe you get a couple of candles. What's this area here? $82, $83, around there, something like that, right? I mean, a single pin bar, if you want to be aggressive, that's justifiable because you have such a bullish environment for this thing, all right? Energy stocks and oil have been nothing but strong. So you want to be a little more aggressive on the bullish side, you can justify that, or you want to wait for another little mini double bottom to develop in here. That's okay too. That's a little more conservative. But at this point, I would anticipate a higher high or at least a double top is within reason. Okay. Again, we want to be within reason here. You don't want to get carried away. Oil is going to be at 200 by next week because, people come out with that nonsense. While some of this pressure implies that, oil can rise very quickly. I mean, 130, 140 is not out of the question based on how the dollar is moving and oil doesn't even flinch. Oil doesn't even budge, right? There must be a lot of pressure behind that thing. So just something to keep in mind. But you want to stay within reason. Don't get carried away. Charts at least can help us stay within reason by looking at previous levels because those levels are likely to see some type of a reaction again, okay? History repeats itself in the market, and that's one expression of history repeating itself, testing a low or testing a high a second time and getting a similar reaction, right? People always misunderstand history repeating itself, and what they look for is they look for a pattern. They'll say, oh, look, back in 2010, oil looked just like this, and look, it looks like it again. That's irrelevant. That's random. Okay, that's not what history repeats itself means. Okay, I hope that's clear. So thank you for your good question. Let's move along here. I know I'm going to be behind on these. That was XLE. All right, hey G Simone, good to see you. All right, Winterfish, love that you always keep it real. Cool. I'm glad you love it. Not too many other people love it though. I mean, my numbers are really low. Okay, no problem, no problem. Freeloader, thanks for reaching out with your question. By the way, people that send me questions, like I get emails and I get questions on TradingView and stuff. My response time is very low right now. Okay, it's very long. I apologize for that. I have a lot on my plate and I can't keep up with everything. You know, I have someone supposed to be helping me and it doesn't help me. So yeah, so I apologize for that. I know it looks bad, and I'm not like hiding from you or anything. It's just I can't do everything, and I have to certain things I have to do before I do other things, right? So I really appreciate your patience and your understanding with that. So if you have sent me a message, I will get back to you at some point, but it's not like I'm definitely going to take me more than a couple of days. Okay, so I apologize for that. I just want to mention that now. All right. Let me see. You and the way you look at the market, you have been saying this months ago that Bitcoin, okay. What do you say on GMT and XM? Okay, so I answered XMR. Let's talk about GMT. Well, GMT, look, GMT is just a garbage altcoin. I wouldn't expect anything out of this. You know, again, these lower tier coins, it started out like pretty good, but of course, a lot of this is a result of hype. So these are likely to break their supports, especially if Bitcoin starts clearing major, like 28K was not a major support. That was a minor one. 25K was more important because that was a recent low. We blew through that too. So the 20K area is a major support. And if that thing clears, these things are just going to push lower. So there's no reason to buy these right now. And if you're going to investing in altcoins is basically, it's like buying lottery tickets, altcoins, because they're all the same. And you don't know which one. And the next rally, at some point, there'll be another bull run, right? It's a cycle. At some point, money will get cheap again. And that cheap money is going to have to find its way into speculative assets. Okay, it's a cycle. And when that occurs again, there's no way to know if these coins like GMT or whatever, the names that have caught everyone's attention in recent time, there's no way to know if those are going to be the new ones. Because why? Because some other garbage coins are going to come out and steal the attention, right? I got a great white paper. You see the white paper? And they're going to solve this problem and they're going to do that. And everyone piles into that one because why? They have good marketing, or they align with a great fake guru with a huge following. And he says, oh, I'm buying this coin. I'm putting everything I got into this coin. I'm buying SHIB, okay? Because it's the next hot coin. And then some unknown coin that isn't even out yet takes the spotlight, and something like that was well known, like an XMR, underperforms because no one cares about it anymore. That's how it works. It's irrational. There's nothing logical about it. If you go about this with logic, you can't win because this is an irrational game. So that's why don't go by that. Well, they have good fundamentals. You read the white paper, means nothing in the irrational world. It's all about the perception of the future, and that changes all the time. Okay, so it doesn't matter. These aren't real assets we're talking about. We're talking about garbage, right? Like NFTs, they're worthless. That's what we're talking about here. We're not talking about Intel. All right. So what do you think about, white coffee? Okay. Good question, Alex, about the white coffee. A lot of fake gurus like that. They always like to pull out some kind of gimmick, right? Like some kind of wave. It could be Elliott wave. It could be Wyckoff method, whatever. Look, I've seen a lot of fake gurus bring that up. It makes sense in some ways, but I don't really see how you can trade on it because it just says, oh, well, there's a consolidation here, so it must be accumulation. And maybe that kind of thing worked 100 years ago, but I just don't see how to make sense of that with the way I trade anyway. It just doesn't make sense to me, right? Because it's I don't know how to define risk using something like that. At least Elliott wave gives a roadmap and gives you something to anticipate. That I don't even know what that does, and I've looked at it. So yeah, I don't give it any weight. Okay. Okay, this is from Belgium. Hey, welcome. I saw the Mark 9 signal. Okay. Does that mean anything? It dropped. Okay. First of all, so the DeMark, I'm very familiar with the DeMark patterns, 9s and 13s, right? And it's basically like a pattern of how prices develop, and it's intricate and complicated. I've looked at it. My opinion is it's coincidental. Okay, just because there was a 9 and Solana happened to pull back 92%. Solana pulled back 92% because it's a worthless coin, not because there was a DeMark number there. Okay, those DeMark numbers are very random, and people think like just because there was a pullback here, but then over here this one didn't work, but then this one, you might as well use pin bars. Okay, at least the pin bar is an actual sign of something changing. Okay, those DeMark numbers, there's just a bar and you just step in front of it. Oh, well, this is a 9, it should turn. And sometimes it turns and sometimes it doesn't turn. They're too random. You need more context. So, I wouldn't put much weight in that. Again, if you're in a worthless coin, it's a worthless coin, right? Solana. I mean, let's take a look at that, right? I mean, look at this thing. All the coins look like this. Bitcoin's been pulling back the whole time. All right, so don't go by that. I've spent some time working with that, and I found it to be random, right? Like most retail trader tools, they're completely random. There's absolutely no advantage to using them. You need context. You need something outside of that to give that thing a point of reference. Now, if that 9 happened to show up at a resistance level, a major resistance level, okay, it's more meaningful, but it's the resistance level that's meaningful, not the 9 or the 13. Okay. All right. Let's see what else we got. Everyone turned bearish, Alex says. I guess we will see an irrational rally to 40K. Right. Well, look, here's the thing. Yeah, everyone turned bearish because they're reacting. Okay. Which is typical. Hold on here. Let me get back there. Which is typical of this type of environment or this type of move. Just like I said, with Bitcoin, if you see a bullish candle develop over the next couple of days, all those same bearish morons are going to be bullish because they're just reacting. Like I'm willing to bet that all those fools that are saying that this is bearish now were bullish here. I'm willing to bet that they were bullish there, or at least half of them were bullish there. All right, which there was no reason to be bullish here. And I was saying it at the time too. There was no reason because we were still below that 32K. It doesn't matter how great it looked. Doesn't matter what was changing. It doesn't matter what Elon Musk is buying. If it can't take out this resistance, it's a lower high. Okay. So I go by objective facts, not opinions or other irrational nonsense. Anyway. So yeah, when you're going to be contrarian, which is nothing wrong with that, you can't just step in front of something. Everyone may be bearish now, but again, like I said, it's a reaction. Momentum is bearish, and that's all that matters to me. As long as that momentum stays that way, I will remain bearish. Okay, and I've been for weeks for the same reason. All right, let's see what we got here. Okay, just catching up. I'm sorry I'm behind. I'm just catching up. So that was Alex. Okay, Kim, Arman, Cape Day from South Africa. All right, cool. Elon Musk homeland there. Winter Fresh 8 from Romania said hello. All right, so Ethereum, about a merge. I'm not familiar with what you're talking about. Is there a merge going on or something? Let's take a look at Ethereum. Again, I pay no attention to news at all. I have no idea what's going on in terms of news. I just look at charts because charts are a reflection anyway. If something bad is going on, chart tells me. So this is Ethereum. I mean, you're looking at basically just another Bitcoin. Let's take a look at the weekly chart. I mean, look at this, right? All those people that had hope around, Ethereum's going to bounce. I don't know how Ethereum's going to bounce if Bitcoin can't bounce, right? So anyone that got caught in this, again, you're lacking perspective. this thing is pushing these supports. This is a pretty significant support. What is this thing right now? 1163. Your next support is at 894. Now, will it get there? Don't know. Okay. You broke some important supports though. So the way I would treat that is you have to anticipate lower lows until it proves otherwise. Now, it doesn't mean that you're going to just get a straight line of red candles continuing. That's what everyone expects. It's human nature to just project forward what they see. They're going to see that and they go, oh, it's going to continue. And it's going to go straight to zero. But that's not how markets work. Okay. So at some point, perhaps over the next week, you will likely see a consolidation, right? A consolidation will probably start with a bounce. That bounce may go a little further than people thought, because again, people think. Don't think. People, oh, I think it's going to go up here like that, okay? Or I think I'm going to draw a level and I think it's going to go there. That's what I think. Doesn't matter what you think, all right? Don't think. Let the market answer the questions. The question is, if it bounces, where can it bounce to? That's your resistance right there, just like Bitcoin. Right now, that level on Bitcoin is 28K. This level is 1695, okay? So that's a potential bounce area that it can get to. If it gets there, that's a possible shorting area, not a place to go long. Now, I'm also willing to bet that if Ethereum and Bitcoin bounce back to those resistances, I'm going to get a whole bunch of questions about, is this the time to get in? Is this the bottom? Is this the time to invest? If you're asking me those questions, you are driven by emotions, because objectively, there's no reason to buy that. Unless you're a day trader or you're an aggressive swing trader, there's absolutely no reason to get into that. But it's a green candle. It's green. It's green. Doesn't matter. If it can't clear a resistance and continues to respect resistances, it has no potential. On top of that, the environment favors bearish activity, not bullish. So you're fighting something you can't even see, right? So that's why I'm not even interested in calling swing trades long, for that reason, because people are going to get caught. All right. So anyway, so I hope that answers your question about Ethereum. All altcoins use Bitcoin. Okay. If Bitcoin breaks, the altcoins are going in the toilet because they're worse than Bitcoin. At least Bitcoin is number one and has name recognition. All right. Let me see what else we got here. When do you expect markets to get bullish again? Oh, so now that's a good question. I don't have a time frame on that. It's all going to depend on the Federal Reserve. That's what I'm watching. They're going to have their meeting on Wednesday. They're going to talk about their projections and their plans, right? And if their plans are hawkish or more hawkish than people expect, well, there's no recovery anytime soon with the markets. And like I said before, we need to see it in the bond market. So I have no idea. It may take a year or two. That's a possible time table. If you're looking at a timetable, forget 1 or 3 or 6 months. Don't even think about that. The changes alone have to be present for a couple of months before you start to see changes in these markets. The macro changes need to be present first. We haven't even started, and macro changes take months to establish themselves, just like they established the top. It took months, okay? And everyone ignored it. So when I see those changes developing at the bottom, most likely the stock market and these garbage coins will be ignoring those changes, most likely, because people are mindless and they only follow what they see. They're not looking at the bigger picture, right? And that's why people are so reactive. And that's why fake gurus do so well, because they amplify that and they encourage you to react to things based on what you see now. React now. But that's not what you should be doing if you're interested in protecting your account and growing your account. All right. That's why I keep stressing being objective. Now, so as far as like the bottom goes, now here's something to keep in mind, right? We have the midterm election coming up this year, and that midterm election can see political changes. Now, why is that important? Because if there are political changes, that can affect monetary policy. That's what you need to pay attention to, right? Are they going to replace Powell? Can they replace Powell? I'm not sure how that process works. If they replace him, are they going to put someone more hawkish in there or someone more dovish? These are questions that we can't answer right now. Again, I don't know like what the appointment process is for the chairman of the Federal Reserve, but there are political changes coming either way, and we have to see how that affects monetary policy. That's the best I can tell you. And then from there, we have to adjust, right? If the Fed gets more hawkish or whatever, things are not going to improve, right, economically, because they're fighting that. The reason why they're getting hawkish is not because they feel like it or because they're having a good time. It's because they're fighting inflation. That's what they have to do. And they have to fight it to a point until it starts to cool off. And right now you see it like it looks to be out of control. Inflation everywhere. We're at 15% real inflation, blah, 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 blah. But the Fed has stepped in. It takes time. It doesn't just, the Fed raised rates. Now inflation is going to be in check. Inflation's back to 2% in just a couple of days. It takes months or maybe even years for that thing to get back into check, right? Where they can say, okay, we've done enough. We're going to start lowering rates, or we're going to stop raising and we're going to consider lowering. When they start using that kind of language, most likely the bonds have bottomed first, because the bonds, which are made up of very smart money, have a tendency to know things, okay? I mean, that's my theory. They know things in advance, right? The bond market knows things in advance. It starts pricing things in advance. So that's where I'd be looking for the bottom. All right, anyway, please focus on ETH and make similar videos and ideas about it. I'm not going to focus on ETH, okay, because it's a secondary coin. So I focus on Bitcoin. But thank you for the suggestion. Do you see Bitcoin going lower than 10K? Or do you see Bitcoin, or do you see Bitcoin breaking 10 to 15-year bull trend, making lower? There's no way to know, okay? All I can tell you, I don't look out that far. You can't, because markets are random. You have to accept that. Markets are random. That means no one knows anything and anything can happen. Environments change, right? The reason why Bitcoin's in this situation is because of the macro environment changed and no one paid any attention to that. So that's what we have to see, okay? Don't overreact. There's no way to know. Like I said before, people are going to come out with these outrageous headlines. Bitcoin's going back to 5K. Bitcoin's going to zero. Blah, 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 blah. You're going to see it because they're trying to get your attention, okay? Well, you say, who cares if they get my attention? Well, when you watch their videos, YouTube rewards them for your watch time. So, if you want to do something about fake gurus, stop watching their videos. I mean, that's all I can tell you. The industry is not going to clean them up. The industry loves fake gurus because they stimulate activity. And you know who benefits from that? The exchanges, the software vendors, the brokers, the Forex dealers, because they're making people basically do things that otherwise they may not have done if they had not listened to that fake guru, especially fake gurus with very large followings. And there are some with millions of followers, actually. So, when you have stuff like that, they're welcomed by the industry. The industry will never clean them up, okay? Just like, 30 years ago, we had stockbrokers doing the same thing. A stockbroker will call you up on the phone and tell you a good story. Like if you're a doctor or a lawyer, they call you up on the phone. What were they doing? They were stimulating activity in whatever stock that the firm was pushing on them, okay? And of course, the firm was long before that, right? And they sell it to these morons they call on the phone. Why would a doctor buy this stock that this guy just called? Because it sounds like a good story. It's the same thing, except today, instead of calling people on the phone, cold calling, you have YouTube, which is a lot easier, by the way, because YouTube works for you. As a cold caller, I've done it. As a cold caller, you have to sit there all day for hours getting hung up on, okay, until you find like one guy that'll listen to you. Anyway, so YouTube, much easier job. I hope that answers your question. Bitcoin has experienced a bearish macro environment since its inception. No, you're wrong. Current environment is much worse than 2008. No, that's wrong. Okay, you're not looking at the macro. I'm saying you're wrong because the macro that you're looking, I don't know what you're looking at. There's a lot of, when it comes to macro environments, there's a lot of really over-exaggerated, what do you call that? When conspiracy theory type of things out there, like, oh, there's no gold in Fort Knox and real inflation is at 30% and blah, 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 blah. Okay. When I'm talking about macro, I'm talking about interest rates. Interest rates, if we go back, okay, we'll go back real quick, right? Let's go back to ZN1 real quick. And let's talk about, Bitcoin came out. Another thing I want to point out. When Bitcoin came out in 2009, first of all, no one knew about it. Only like developers and people that were very close, to the source knew about Bitcoin. Okay. I mean, I found out about Bitcoin in like 2013, but Bitcoin, when it first came out, no one knew about it. No, first of all. Second of all, if no one knew about it, that means it was pure retail. No institutions were involved. That was a big change in 2017. So you go back and say, well, 2008 was a tough time also. And, macro was bad back then too. Let's look at the bond market. What were interest rates back then? First of all, okay, interest rates, look at 2008. Okay. Yields were rising. Look at going over a few years, 2010. Look at where we were in 2013. Okay. Look where we were here. Those are rising futures, which means yields were lowering, not rising. Okay. Rising prices on the futures means lowering yields. That's not a negative for Bitcoin. That's a positive, because that's going to create cheaper money to flow into speculative assets. Now, back then, again, there was pure retail back then. Okay, so that's another thing. You're comparing apples to oranges. Don't compare apples to oranges. A retail market is not the same as an institutional market. Retail traders are mindless, reactive robots. Okay, institutions have deep pockets and they have better information, so they can do things a little differently. Plus, institutions prefer a more stable market, and they can make markets, right? A retail trader can't make a market. They're just speculating, trying to make money because they all think they're going to get rich, right? Because they buy into that fake dream that they push on you all day. Institutions have deep pockets, and they promote a stable market. I mean, just look at like what market makers do. We're efficient markets. We make markets more efficient, right? By taking out all the money that used to be available to speculators, they've taken it out. Okay, you don't realize that because no one pays attention to things like payment for order flow and all that other stuff. No one pays attention to things like algos that have preference over the exchange when your orders go to the exchange. Okay, no one pays attention to who cares? I don't have to be first. Well, a market maker that moves millions of shares being first and basically selling those shares for a penny profit equates to a lot of money that used to be available for speculators and is no longer available because all these market makers took that money out of the system. Okay, but again, payment for order flow must be a good thing. It's not. Basically, they've turned the market into like a Forex market with payment to order flow. It's a conflict of interest. Anyway, I bring that up to answer your question because, again, rates were actually lowering. And now we go back to here. Look at this, right? So rates were actually good. They were going lower and lower up until, what is that? August of 2020, right? And then they started to change. And the stock market ignored all of that, right? Only until recently. So that's what you're looking at. That's the macro. That's the macro view right there. And with bonds going lower and lower and lower, right, that means rates are rising. So anything speculative is going to suffer, especially in this institutionalized type of market. Because retail traders, I remember when Bitcoin used to be pure retail and its movements were more exaggerated and less noisy because, retail traders are very emotional and very extreme. But once we switched over to like the institutional and the futures and all that other stuff, that's when things started to get harder. But you know what they were saying back then when they were going to come out with the institutional, whatever, the futures and all that? Oh, the market makers, hedge funds have to buy it. Bitcoin's going to go to 100,000 this year. That was 2018. Anyway, all right, let's get out of that macroeconomic talk. But that's a very important thing. And don't compare apples to oranges. Okay. Again, it's all about having the right perspective and being objective. So thanks for mentioning that. Absolutely. Okay, cool. I have yet to see one. Okay, I've been a follower. Oh, cool. For a couple of years now. And your psychology and education takeaways all from your streams, posts help me leagues in making better. Oh, cool. I'm glad to hear that. You're okay. Cool. Thank you. I was just curious. What are some historical Bitcoin positions that you've taken, and what was your mentality? Well, I can't say a whole lot about that here because of house rules, but back in, what was it, 2018, 2019 or whatever, and there's records of this, we were buying Bitcoin at like, I think there was a purchase made at like, was it 14K, and then again at like 10 or something, and then again at 6. So it was something, I can't, don't quote me on those exact prices, but it was something like that. Okay, it was when Bitcoin basically went from 20K to 3K, and we were buying into that, and I was getting nothing but made fun of. People on TradingView were saying things like, "Oh, you listen to this guy, you're going to lose all your money," right? All those type of morons. And they were saying Bitcoin was going to go to 1,500. But we were buying into it. The mentality was that we were buying the pullback, right? Now, keep in mind, at that time, when Bitcoin was pulling back, at that time, let's go back. This is the 69K run, right? So let's go back to the 20K run. Where is that? All right, this is the 20K run over here. This 20K, yeah, it's about there, right? So we were buying during this pullback. Okay, now again, the environment wasn't like a major factor like it is today. Things were generally bullish, and Bitcoin was just pulling back for whatever. So we were betting on this thing bottoming out, basically the wave 2, right? Which you saw, wave 2 was a couple of years long here, okay? And then it started to break out. But that was basically the thought process back then, was just buying that broader pullback. Now, again, all we had to go by was this initial wave 1. That certainly wasn't 5 waves, right? This was the top of a wave 1, a broad wave 1. That was the thinking. So we're looking for a wave 2, right? Into a potential wave 3. And we happened to get that, all right? Which when this thing started to break out, wave 3s typically look like this, all right? And that's what we saw. So that was like a historical, if you want to talk about historical positions, that was a historical position. And that was the reasoning. It wasn't complex reasoning. It was pretty simple. Now, we could have been wrong, and Bitcoin could have went to 0. The thing is, we were prepared, right? We weren't taking huge positions. We were prepared for if Bitcoin does go to 1,500 or lower. Hey, it was a risk that we took, right? That's a part of it. Now, it happened to go to 69K. Now, did we hold from 3K or 5K, whatever, to 69K? No, of course not. We sold on the way up, right? I don't remember where we got out of this thing, but it was nowhere near the 60s. It was in the 30s, I think, or 40s possibly. So just to give you an idea. But again, the rationale, the thought process was the price structure and the broader trend, and we didn't have this macro environment weighing on it like it is now. That's why I'm so bearish. It's a much less about the chart. Someone pointed out like a couple of weeks ago, oh, a year ago, you were bullish at the 30K level. I was, because a year ago, the market was in a different situation, and there wasn't this, like I said, macro weight on the market like there is now. Things were uncertain. Yeah, there was some uncertainty, but it was a pullback off of a high, right? I mean, 30K a year ago was right here. Look, in this area right here, this area. See this? I was bullish there because it was basically a pullback into a bullish structure, right? This was the structure at the time. So this was a higher low pullback. That's what I was looking at. And that's why I was bullish, okay? Had I known that this thing was going to run to 69K, I had no idea. All I knew was it was a higher low. All right. Once we peaked at 69K, which I talked about a lot when we were up there, looking for the pullback. I was bullish up until this point. I was bullish. I had no idea we were going to 30K, but I changed when we started breaking important supports. Like if Bitcoin was going to be bullish, and I've said this before, go back to my videos from these times, you'll see it. If Bitcoin's going to break some important supports, then it's not bullish anymore. Okay, something that's strong should not break supports. It should respect them. It should not break. We respected 30K back here. Okay, we shouldn't have broken 50K. We should not have broken. When it broke, that's when I started to become suspicious. And then once we started taking out support after support, You know, we cleared that. Once we cleared this area here, like these 40s, that's it. Party over. Now we have lower highs. The structure is completely bearish. No reason to be bullish anymore. And then on top of that, we have a negative macroeconomic environment weighing on this thing. So that's going to keep me bearish, okay, for until I see changes there. All right, so I hope that answers your question. Let's see what else we got here. What other questions? I'm just catching up here, so I apologize. I want to try to answer as many questions as I can. I know I'm getting tight on time, but please just stick with me here. All right, Peter, hey, okay, just catching up. I'm sure. Oh, Cardano, man, that was a while ago. She asked about that. All right, let's take a look. I remember one guy asked me, goes, can you talk about Cardano, and please don't yell at me, because he thinks I was just going nuts, because I would always criticize Cardano. You know why I criticize it so heavy? Is because I saw so much overhype on it. It was so bad. Like, man, people are going to get hammered in this thing because it's such nonsense. And that was, as we can see, where Cardano went. So you're short from 61 cents. This thing's at 48 cents. All right. So here's this is a weekly chart I'm showing you here. Cardano, by the way, shouldn't have taken out $1 if it was going to go do anything. But it can't do anything if Bitcoin's not going anywhere. So again, Cardano is just a garbage altcoin, just like the other. How could you say that? Cardano is the most trusted, blah, 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 blah. They have an amazing white paper. Blah, 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 blah. Nonsense. Okay. Lower high right here. What is that? 66, 67 cents around there. What is that? Basically, you can round that to 70 cents. Lower high. All right. As long as that lower high is respected, a lower low is likely. Now, you don't have the lower low in play yet. You have a pin bar developing here. This is a weekly chart. Again, you have the whole week for that to play out. Let's go back to the daily. So you have the pin bar. Now, again, you're short from 66 cents, right? So I think was that what you said here? You're short from 63 cents. Okay, so you're looking at that. You're basically short from the lower high. If you were going to get short, that was certainly a good place to give it a try, okay? So at this point, here's the thing. You have to ask yourself this question. How much do you have at risk? And are you beyond your reward risk? Like, you are beyond 1-to-1. If you are beyond 1-to-1, it's a good idea. Now, I'm not telling you what to do, but it's a good idea to take something off the table, okay? Because again, short squeezes, even though these things are bearish and we have a bearish situation, short squeezes are very possible. As you can see here, there are a number of them. Look at this one, right? Something like that can scare you right out of your position. So take something off the table, maybe 20%, 30% of your position. Just lock something in near these lows and then see where it goes from there. At least you've locked something in. But that's all a function of your risk. So only you can answer that question. You shorted at 63. Were you risking a penny? Were you risking 5 cents? What were you risking? And if you're over that now, then you should take something off the table. And then it's always a good idea, if you have a winning trade, to try to let some of it ride. See how far the market wants to go. This right here is a bullish pin bar. All right. Now, just because the pin bar is here doesn't mean that this thing is going to turn right around and we're going to see a rally. Doesn't mean that. It just means it's a bullish pin bar there, right? That's all it is, off of a support level. Now, if I was looking for longs, that would certainly be a place to consider an aggressive long, all right? But in light of the environment, I don't expect longs to go very far. So like I said before, I'm not calling aggressive longs in Bitcoin because I just don't believe in the potential. And plus, people can't handle getting out of those things, right? So at this point, see if this thing can form another resistance, something around there. What is this price here? Around in the mid 50s, maybe something like that. And see if you get another lower high there. That's one thing you can do. Like I said, after taking something off the table. And it would probably be a good idea to put your stop to break even. Now, it can be frustrating if you get stopped out. It goes all the way back up there. It's possible. So, but at least, if you locked in some profit, at least the trade is green. You have to look at it objectively. People get emotional. I was up $10,000 and now I'm breaking even. This sucks, right? But if you lock something in, at least, I only made $1,000. That sucks. I had 10,000. I only made it. You made 1,000. Okay, but people get emotional because they think that that 10,000 should have been theirs. I mean, I say this, I go through those emotions too, but at least I'm aware of them. Okay, and I know that the thoughts are wrong. So just something to keep in mind. If you want to control your risk, this thing has moved significantly and Bitcoin is still on its lows. So it wouldn't hurt to put your stop at break even. Keep in mind, you may get stopped out for break even if there's any kind of sharp squeeze. We do have the FOMC coming out this week. There could be a surprise there. Who knows? Okay. But theoretically, structure favors a test of lows. So I think it's also, besides locking something in, it's a good idea to hold on to some and see if that low gets taken out, because probability and structure favor that scenario. Doesn't mean it will happen. It's just favored. Does that make sense? Okay. So, again, I want people to come out of these streams with the right ideas, not expectations of some kind of solid, or he said it's going to do this, so it's going to do this. Markets are random. So all we can do is get a sense or gauge a probability and then let the market do the rest, right? The market has to play out or not. And you have to adjust to changes. Like that's a change right there. Bullish pin bar off of support can turn into a buy signal. If that turns into a buy signal, do you have a plan? What are you going to do? Are you going to get out of some? Are you going to get out of some more? Or are you going to be like, no, I'm just going to hold on to it? You have to decide that, because there's no way to know how far that little rally will go. All I know is the environment doesn't favor it going very far. Okay. All right. So I hope that helps. Good short, by the way. Okay. Dollar index, Kai. So I talked about that quickly. I mean, if talk about that again real quick. I mean, dollar index new high. There's not a whole lot to say about this except reflection of the bond market, higher low, higher high. So any pullback on this, I'd look for another higher low and higher high. I mean, but this is not surprising because the rates are rising. Maybe you get a double top here, possible, but that won't mean anything. As long as rates are rising, this thing will probably find support. So when the bonds change, you're going to see the change in the dollar as well, because it's a reflection, right, of the same thing. First thing you're going to have to see at least is that support get taken out, at least significantly taken out, not like a touch and then a bounce again. You had touches and bounces back here too. If you got bearish on that, that wasn't very effective. Okay, so I hope that helps. I'm just going to try to move a little faster here. Okay, okay, yeah. Kai says like and share. Yeah, do me a favor. It helps me if you like the video, I think, at least. Okay, so if you can like the video, that's nice. Thank you. No one shares these things, Kai. No one shares these. People keep them a secret. All right, Steen. All right, from Belgium. Cool. Steen made an interesting observation the other day. Steen sends me a message, and I said, everyone's all big and loud and talks a lot in a bull market, but when everything gets bearish, everyone's quiet. Also, the fake gurus. I thought that was really funny. At least Steen sees it. Okay, man, I'm just catching up here, man. This was like an hour ago. All right, what's your next target? What's your next target? All right, I guess you're talking about Bitcoin. I covered that. All right. Dave in the UK. Oh, Dorset. Hey, welcome. Okay, 75 basis points. Right, so that's the FOMC. That's what they're expected to raise or whatever. That's priced in. So don't, that's old news. Don't even react to that. I'm guessing so. Right, priced in. Any type of reaction, like I said, any type of reaction that you're going to see as a result of the FOMC is going to be if they give some kind of insight during their press conference, right? And that's what the market is not. Maybe the market knows something and is pricing something in now. I don't know. Okay, but the thing is, if there are any surprises in that press conference, that's when you could see some type of reaction. Something you're not going to know that now. All right, I hope that helps. I checked the bonds 3 times. Okay, cool, Alex, cool. All right, I checked ZN1 every day. Oh, okay. Vanessa's. Oh, cool. I'm glad you checked that. Oh, I'm glad people are looking at the macroeconomic view. Like I said, if there's going to be one thing you follow, just one thing, it shouldn't be Bitcoin dominance. It should be the bond market, the 10-year note in particular. It's watched by a lot of people, a lot of people that know what they're doing. All right. Am I happy today? All right. Travel. Come on, travel. People are losing a lot of money. Don't be happy. Be objective. All right. My buy orders start at 15K. Okay. Come back to me in a year. Okay. Well, look, again, 15K, anything is possible, but this thing's going to have to get through 20K. That should be a significant support. We'll see. The environment favors a break of that support, but we'll see. Now, again, like I said, buying into the lows, collecting, accumulating inventory in this situation. Hey, at least you're not buying highs, okay? But just understand that you have to be prepared for the possibility. That's all I'm saying, because there's no way to know. Be prepared for 10K, okay? That's all I'm saying. Account for it. Like, oh, if I buy some here and I buy some here and I buy some here and it goes to 10K, how does that fit into my investment plan? Am I going to get margined out? Am I using margin? How is that going to work? Account for it. It may not go there. Okay, it may stop at 20K and this could be the bottom. Who knows? But account for that risk. That's not the same as expecting it to get there. Does that make sense? Okay, I've seen just like people going all in leverage long. This is the bottom. Yeah, Kai. Viewership during peak bear should be in general. Yeah, I mean that's Kai. You're right. You're right. I mean, definitely the participation and all that stuff will change across the board because the mainstream herd gets discouraged because buy and hope no longer works. All those fake gurus that encourage you to just hope, just buy more Apple. Just let's buy some more Apple and just hold on to it. Why is Apple getting cut in half? Those people are all going to get caught and they're going to be, the stock market sucks. It's rigged. The market makers. These day traders, right? Back in the day, it used to be they blame everything on day traders. It's these algo guys. It's always something, right? It's Russia's fault. Okay, something. Okay, but it's not. It's your fault. Whoever, you're responsible for your money. If your money evaporates, it's your fault. Okay, markets are random. So it's like playing a slot machine and expecting to win. Right? We all know that's laughable, but with the market, we expect to win. Right? With a slot machine, it's just entertainment. The market's a giant slot machine. All right. Nina, 2025 will bring smiles back. I don't know. Don't have any opinions. Don't get stuck on an opinion. Maybe, like I said, there's some political changes coming soon, and we have to see how that affects things. How is monetary policy affected? That's where things will change. Okay, the U.S. dollar is the world reserve currency. So interest rates, which affect the dollar, are going to affect that. They affect everything. So we see changes there. Like if the Fed were to come out tomorrow, right, and the FOMC, they come out and they say, we were wrong, and forget the 75 basis point raise. We're not going to. In fact, we're going to lower our rates to 0 right now, just to be a good guy. We're going to do that. Okay. If they were to do something that, I'm exaggerating, but if they were to do something like that, the S&P would be up 1,000 points in like a minute. Okay. Because, and all the free money would come right back into the market. And then you'd see your garbage altcoins, Bitcoin would be the first one. Bitcoin would be up 5,000 points in like a minute. Okay, if they were to do something extreme like that, but you're not going to see that. Okay, but that's the kind of that's what will start to lead to those changes. Not something that extreme, but when they start going that route with their talk, they stop raising rates, they start lowering rates, which again, they haven't even begun that loosening. What do they call that? Quantitative easing cycle. They haven't even begun that. We're still in a tightening cycle. Okay, international. It's the only, cool. Okay, Elizabeth, cool. She was smart. All right, good to hear. Where do you see S&P going? Lower. All right, lower. S&P is not going to do well. Look at this. Some moron came in here a few weeks ago and says, Bitcoin doesn't follow the stock market. It's all nonsense. Hope you didn't listen to that guy. Look at this. S&P getting hammered, lower low. S&P should not be here, okay, if it was going to be strong. But again, S&P is going to be affected by the interest rate situation. So this isn't surprising. Where do I expect S&P to go? Let's take a look at the weekly chart. Look at the next support, right? This is weekly. So S&P has a long way to go. We're looking at, what is this here? 35, 36 area. And then there's a low over here, 30. So between 35 and 32. Right now we're at 37. So it's like 300 or 400 points. But that's a lot for the S&P. That's a lot. It's a lot of money. But the S&P was filled with hot air to begin with, okay? And the hot air is coming out. So that would be a good area. That's why I was telling people back in December and earlier in the year, go back and watch my videos. Stay away from stocks. I was saying, do not invest in stocks. Why not? Apple is going to go to 1,000 like Amazon, and it's one of the top stocks for this year. Don't invest in stocks, okay? This is why. How about now? Should we invest now? No. Interest rates are going to weigh on these things, and there will be a time to invest. It's just not now. Or, you want to accumulate your best stocks, and they're weak. Okay, small bites only. No reason to be on. The mistake that everyone makes is they go all in. All right, I got 10,000 to invest, all in at this one price because I'm good like that. I can handle it. And then it gets cut in half. Okay, small bites. You have 10,000, invest $500 a month or $250 a month for the next 6 months or 10 months or whatever. Okay, and now your money is not so exposed. And now you're more likely to accumulate as the market goes into its bottoming process, which means there may be lower lows. With the S&P pushing this low, what's today's low? 37.35. That's a lower low. Looks like we closed weak, okay? Closed weak right here. You see that? This is an area for a potential failed low, but that's a pretty lousy close. Do we get a reversal on the FOMC? What if we sell off by another 100 points maybe tomorrow, and we go into Wednesday, and Wednesday we see a massive rally because Powell says something dovish that no one was expecting, right? People, the bottom is in. Oh, the bottom is in. Okay, everyone just buy and hold now. Bottom is in. If we get a bullish candle here, that's a swing trade signal, but certainly not an investing signal, okay? Not until we see changes in those broader markets like I talked about, bonds. All right, hope that answers your question. Levant. It's from Turkey. All right. You always say you don't short Bitcoin. Why? Since Ethereum moves similar to Bitcoin, do you short Ethereum? Okay, good question. That is true. I don't short Bitcoin. Okay, and I'm not going to start now. I've been saying it from 69K all the way to here. Still not shorting Bitcoin. Why? Bitcoin's bearish because I can short other markets. I don't short Bitcoin. Number one, requires leverage. I don't want to open up a leveraged account and all that other nonsense just so I can short Bitcoin. I can short the S&P. I can short Forex pairs. I can short the NASDAQ. I don't need to short Bitcoin, okay? Ethereum is the same story. So that's number one. Number two, there's no regulation in this space. And I've seen situations. Now, it's not like I'm going to short millions of dollars worth. No, that's not true. I wouldn't do that at all, even if I was going to short it. But they can claw back shorts. I've seen that done where there was a short and the exchange says, oh, no, this was wrong. And they cancel your position. Okay, so like that kind of stuff is a turnoff. Now, that's not likely to happen, but still, it just proves that the lack of regulation, like why bother? Why bother? I can short other markets, which I'm much more interested in anyway for shorting. Bitcoin, generally, overall, I'm a Bitcoin bull in general, but not when momentum is bearish. So I just step aside. It's very simple. Doesn't require any effort. All right, so good question. Bitcoin is energy in the first place. It's not mimic money. Check those news. Oh, miners help Texas energy system to sustain. Oh, okay. Yeah. So obviously, that's a good point. Yeah. Bitcoin requires electricity, right, to mine these things. And that's why that's like one of the expenses that they have. Okay. So I don't know how that ties into lower prices, but miners help Texas energy system to sustain critical level. So I don't know how that's bullish, so, electricity is an expense. And energy stocks have been doing, as we could see, like energy stocks have been doing better, but I don't know if that has anything to do with Bitcoin. Anyway, thanks for mentioning. Kai, today I talked to someone who went all in, leveraged long at 24K with the argument that, okay, especially RSI are oversold. And we had many liquidations, and it can't continue like this. Kramer, let's get long because the RSI said so. What's the RSI, Jerry? I don't know what it is. Yeah, I mean, that's funny, Kai. RSI oversold is probably the most reason why liquidation. Yeah, so, people don't understand. They look at these oscillators. I'm going to wrap this up here in a couple of minutes. So I know I always say I'm going to wrap it up earlier, but I like to talk. I can't help it. RSI, people get wrapped up. Look, I've spent time with the RSI. I know how it works. And the problem with the RSI, if you're using it on a very small time frame and you're looking for particular changes on a small time frame, it has its place. When I'm talking about small time frame, I'm talking about like 5-minute charts, okay? Not daily charts. It's too isolated of a variable, and it doesn't take into account a lot of things. That's the problem with all oscillators, right? Whether it's the CCI, whether it's the RSI, they're too isolated, and they don't account for a lot of other factors. So by doing something like that, I'm going to buy it because it's oversold, and how much lower can it go? You might as well flip a coin because it's the same thing. Okay. Anyway, thanks for mentioning. From New Zealand, Mark Chu hey, Mark Chu, I remember you. You got me short the New Zealand dollar. Got stopped out. I'm not going to blame you. I took the position. It got stopped out. But eventually it was right. Could you look at DVN? What is that? DVN. Let's take a look. Is this, energy. Okay, so not surprising. We saw XLE, looks like the same exact chart. They're pulling back for whatever reason. Okay, maybe it has something to do with the rising rates. I don't know why they're pulling back, but oil isn't pulling back. So if that's the case, how far are these going to pull back? I wouldn't be bearish on these, not yet. It's just a pullback so far. Yes, this is pretty nasty. You have a gap in there, all right? But I would be looking for supports, right? You have a support on Devon Energy right here, 65, around there, right? Look for that area. Look for stability to develop, especially if oil breaks out. And oil is poised to break out, okay? So just something to keep in mind. These things are going to be affected by oil. Now, the dollar, as we saw, was pushing highs, and these things should be going lower in the face of a strong dollar. They should be, but oil refuses to break. So these are in a conflicted situation. So forget logic, resort back to the structure. This is bullish, higher lows and higher highs. Nothing bearish about it. Look for supports. As long as supports are respected, look for longs. Doesn't mean you just jump into any long. It means look for confirmation and measure your risk. There will always be risk. Maybe this thing is going to change its trend and you happen to get long in that process. You're going to get stopped out. That's part of the risk that you take. Okay, so just something to keep in mind. But based on this, again, objective and factual information, I would be looking on the long side and waiting for a long setup. Okay, whether it's XLE or another one of these energy stocks, because oil is strong. Okay, and they're going to be affected by oil. Okay, let me see. Greeting from Ukraine. You guys are allowed to use computers over there? Hope everything is cool. Oh, from Kiev. I'm not even sure how to pronounce it. I'm not going to pronounce it because I might pronounce it wrong. But welcome from the Ukraine. Wow. All right. I see a lot of talk about that place recently. Good evening. Okay, XAG, silver. So as you know, gold, got hammered. As if you go back to my previous streams, I've been generally bearish on gold, right? People have been saying, "Whoa, how could you be bearish on gold? Gold is a safety, blah, 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 blah." In the face of a strong dollar, this is what should happen, okay? That's why I've been bearish on gold, because dollar is strong. How these metals going to rally with a dollar that just keeps getting stronger and stronger? So here's the thing. First of all, metals are very long-term type of things if you're going to play them. If you're going to play a short-term metal, obviously you're going to have to use the CFD, or the futures contracts. But this is silver. You have a lower high just here. Silver is not a leader, right? Gold is the leader. So go to gold. Gold has a similar situation. Lower high right here. Anyone that was bullish on gold in recent time, you get a lot of these moronic gold conspiracy theory people. Gold is, there's no gold anywhere and you can't buy it. Fort Knox is empty and blah, 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 blah. Gold is going to be at 5,000 by next month. Don't miss out. Buy gold. Lower high, broke supports. Lower high, likely to lead lower low. Go by objective, factual information. This is structure. Price structure is a reflection of reality, okay? So this is a pretty significant break. Of course, dollar is making new highs. That's a macroeconomic fundamental that is behind this thing. Now, gold has generally been strong. Generally, if we look back, right? Gold is in a bullish generally, but more recently, this is a consolidation. So am I going to be like long-term bearish on gold? No, just until the dollar changes, right? That was an old trade in there, by the way. So look for supports. If you're interested in accumulating gold, look for the range lows. The range lows are in the 16 and 1700s. Right now, this thing's at 1820. So if this thing can test the lower 1700s, so what does that mean? You asked me about silver. So look for the same deal in silver, right? Here's silver. So silver, what is it, $20 level is going to be significant on silver, right? If you're accumulating silver, just keep in mind you're fighting a bearish macro situation, and it's possible silver can break this support. So don't go nuts with it, okay? If it can give you a buy signal at that double bottom potentially, then maybe for a short-term idea, okay. But it's a tough trade with the dollar doing what it's doing. So basically, if you buy silver, you're hoping for a dollar pullback. But a dollar trend change is another story. I wouldn't be very optimistic about that. So if dollar continues to rally, this is more likely to break. Okay, so keep in mind you have a potential trade setting up here, right? Potential idea in this area. It's not there yet, and you have no buy signal, but that's the area I'd be looking for, and it's aggressive, meaning don't have high expectations of it. It most likely won't break, what, 22, 28, or 22 and a half. You want to give it a little more room. Most likely it will not get back up here if that lower high stays intact, and it's more likely to make a lower low followed by a lower high. That's what a bearish trend does, or at least short-term bearish momentum, okay? Until we have some changes. So I hope that helps. All right, let me jump over to the chat. I'm going to wrap this up here in a minute. Let me just go back here. What do we have here? Can you show us how to enter a trade? No, I can't do that here. Can't do that. Sorry. Can you have elevated? Okay, I'm just going back. Okay. So, hey there, folks. Maybe this isn't the time or place, but I'm new. I'm curious to know what's your best advice for someone like me. All right, I'll answer that question. All right. From Drills, it's extremely frustrating, man. Aspects of trading, only to have price stop in its tracks, only to come back. All right, first of all, stop thinking. Okay, this is what I tell a new trader. Stop thinking, because you're lacking the experience and the perspective. Don't even think, because all your conventional wisdom and conventional logic is completely worthless. I'm not saying that to be some kind of egotistical whatever. I'm just saying that because that's the reality of the market. You must embrace that markets are random. That's the number one thing you can do. Embrace markets are random. Write that somewhere and paste it to your head. Markets are random. What that means is no one knows anything about the future. It doesn't matter how experienced they are. It doesn't matter if they've been in this game for 50 years. It doesn't matter if they're a hedge fund manager. No one knows anything about the future. Okay, that's the first thing you must accept and embrace. The second thing is probabilities are what you must gauge things by. Probabilities. And you need objective, factual information to gauge those probabilities. I can't come up with a hard and fast way to have a precise probability. I can't say there's a 95% chance that this is going to work. I can't say that, but I can come up with a loose gauge and basically come up with something that says there's probably more than a 50% chance, which is greater than random, that this will do this, okay? More than a 50% chance. It might be 51%. I don't know. Okay, there's also a very high chance that it's going to be wrong. So that is where the risk management comes into play, which is the third thing I'm going to tell you is focus on risk. Focus on losing, not winning. Focus on risk. Everything should be risk first. If I here's an interesting idea. Well, how much is it going to cost me if I'm wrong? And what percentage of my account am I risking? Most beginners don't even, everything you asked right there, you hadn't mentioned one thing about your account or anything like that. Beginners don't think in those terms. They think, oh, I'm going to turn $500 into 50,000 by next week because some fake guru told me so on the video. Or even more, oh, you can make $1,000 a day. No, it's easy. I started out making $100 a day, but now I can make $1,000 a day. That's all nonsense, okay? Especially when they don't talk about the risk that you must take or what size of an account you need to make $1,000 a day. They never mention those details. Oh, that's easy. Just put on more size. Great. Are you making $1,000 a day on your $1,000 account or on your $50,000 account? Okay, there's a huge difference in the two. Okay, so anyway, so those are the three things I would tell you. All right, again, just to recap them, markets are random. Number two, you need to focus on price structure and get factual, objective information. Don't listen to people. Number three, focus on risk. Always ask how much you're risking and look at it as a proportion of your account. Profits are random, okay? So when people, like I explained to that person earlier, she was short or whatever, take profits as a function of what your risk was. If you're greater than 1-to-1, take something off the table. You've beat your risk, okay? You're greater than your risk. Who cares how far it goes? Take something off the table because you're greater than your risk. If you focus on that, you have a much better chance of preserving your capital. What I've just described here is the defensive mindset, which is the complete opposite of what you'll see anywhere else. If you go just do a simple Google search, right? Forex trader, you just Google that. Everything that comes up, every single thing that comes up has this idea that to be a trader is some kind of skill. And that, if you just spend enough time, you can learn this skill and make lots of money. That's implied everywhere. And it's the furthest thing from the truth. This is more of a game of chance than it is a game of skill. And the skill is not where you think it is. Everyone thinks, oh, of course, the skill is in chart reading. Yeah. The RSI, I'm going to get good at that. Yeah. The skill is in risk management. Okay. Let me ask you this. How many people here play poker? And if you don't play poker, you should learn how to play Texas Hold'em. Even if you don't gamble real money, you should learn. You know why? The skilled poker players, the real skilled professionals, they don't sit there. Where do you think the skill is in poker? That's the question I want to get at. Where do you think the skill is in poker? At first impression, you're going to think, well, the skill is in reading the cards and the number, the probability of the cards, and that part of it. But the real skill in that game is not the cards, because the cards are a probability, okay? And they're random. The outcomes are random. That's why you can have a beginner show up at a poker table and beat someone that's been playing poker for 30 years because the beginner just randomly had good cards, right? That's not where the skill is. The skill is in how you manage your risk, and the skill is in how you deceive others. Right? How you fake people they make you win a hand because you fake everyone else thinking that you have a strong hand and you don't. Right? That's the skill in poker. That's the control you have. You can't control the cards. You can just give the perception that you have better cards than others. So my point is, why am I bringing that up? Because you have to understand where the skill is in this game. It's risk management. Okay? Not RSI. Because every guru that I watched has the RSI. Oh, look, the CCI, that one's exotic. Oh, look, a trend channel. Random. Okay? Anyway, I know I'm getting out of hand over here. All right, let me stop. All right, I'm going to wrap this up. I got to stop talking. I have to stop. I just have so many questions and I'm so happy to talk to people. All right, let me just see. All right, one more and I'm out of here. All right, I've elevated your trading. Great. Okay. If I missed your question, by the way, I apologize. I've had a hard time trying to figure out my entries. I keep averaging. No. Yeah, okay, averaging. Bad idea. Look, averaging, there's a place for averaging. In fact, I endorse averaging all the time, dollar cost averaging, but you can't do it on small time frames, number one. It's very hard to do. If you don't have perspective, it's a bad idea. Okay, because you're going to be taking much bigger risks than you should, especially if there's leverage involved. Dollar cost averaging is more appropriate for investing, and dollar cost averaging in small amounts All right. So, and it's a function of how much money you have to invest. If you have $10,000 and you want to do $100 at a time, what is that? That's a what, 1% of your total capital, right? So if you're investing 1% at a time and the market gets hammered, most of your money is out of the market, right? And you're just buying a small amount of time. You're accumulating very slowly, basically maybe once per month or something like that at a very slow rate. Okay, dollar cost averaging is a bad idea on smaller time frames. You really have to understand what you're doing, because what's going to happen is you're going to get caught with a position that's too big. You're going to take a much larger magnitude of risk than you thought, and you're going to get hammered. Okay, so I would not suggest dollar cost averaging if that's what you're talking about in that sense. You have to have it controlled, right? Sizing has to be controlled, and you have to take small bites. Now, the reason why people don't want to take small bites is because if the market goes their way, I only made a couple of $100. I should have made 10,000, right? Greed. That's why. They don't realize that over the next couple of weeks, the market could be a lot lower. And that, a couple of $100 is now going to go to minus, 200 or 300 or whatever. And at that point, it's a good thing I didn't put in all my money, right? So you have to see that bigger picture. Again, if you don't understand the macro picture, don't dollar cost average, or if you don't want to if you don't want to understand it, you still want to invest in the market, just go small. The macro environment doesn't support you yet. At some point it will, but you may have to do it for like a year. Okay. And you're going to have to be very patient and sit on that loss, because you're going to be sitting on a loss. I'm telling you right now. All right. If Bitcoin breaks 20K, you're going to be sitting on a loss, or whatever, if it's in Bitcoin. But the loss shouldn't be severe, meaning, out of your $10,000, maybe you're only $3,000 or $4,000 in. That money is now worth maybe 3 or 2, right? So it's almost cut in half, but you still have 6,000 on the side, which you haven't touched. Okay. And it's still going into the market slowly. I hope that helps. I mean, I could talk about dollar cost averaging for hours. Now you know why I'm single. All right. Anyway, can you show us? Okay, yeah, I answered that question. All right. How do you see CME gaps? I don't pay attention to those. So how many mention of them? Gimmick. So there's this thing, Alex, obviously, gimmicks. So and a lot of these fake gurus, they bring them up all the time. You know why? Because randomly they sometimes they work and sometimes they don't. There's no way to know. The CME gap is just another gimmick. It's like the Bitcoin dominance. Oh, you have to look at the Bitcoin dominance because it has no bearing. All that Bitcoin dominance, and no one was calling for Bitcoin going below 25K. Bitcoin dominance. All right. Okay. So anyway, no bearing. Just another layer of complexity that's unnecessary. What are your thoughts on stocks like SQQQ? Okay, and VIX. So the SQQQ is the short Qs. Now, here's the thing. If you're getting into this now, like the Q is right, it's vertical, right? Because the NASDAQ is pushing lows. So basically, you're going long on the short side, right? You're taking advantage of the NASDAQ going lower. But if you buy this now, you're shorting the bottom, right? The chances of this continuing at this rate are low. So why would you do it, right? It's not a bad idea, but you missed your chance. This was it, right? Of course, we're looking at this after the fact, but if you're going to buy this thing, that means you need to sell. I mean, you need to buy this thing when the NASDAQ's at a resistance, which means the NASDAQ needs to rally, right? So forget this is out of the question now. Why would you buy the high? Just like when all these other, remember when all these altcoins were pushing their highs? And people would ask me, how about Solana? How about this one? How about that one? And I look at the chart and it would look like this, right? And I'd be like, why would you buy the high? So it's the same story here, all right? Even though, yes, I'm bearish on all these things and the markets are generally bearish, it doesn't mean, selling the bottom is going to work out, because that bottom may have a temporary bounce. And if you're caught with leverage, you're going to get margined out, because the up move, the squeeze can be a lot more dramatic than you would think. So I tell people, don't think, right? What if the NASDAQ runs back up to 12,000 in just a couple of days? That would be a very dramatic move. And people are going to think, oh, okay, NASDAQ's going back to 17,000 now. Everything is okay. But those type of bear market rallies are possible. So you can't really look at them with any type of weight. Okay. All right. And VIX is just the VIX index. I think that's a good gauge. It's basically measuring the put buying in the S&Ps. So again, the VIX is going to rise when the markets sell off because the funds, I'm not talking about retail traders here. We're talking about people with big money. They buy puts and the index rises, right? So it's the same story. You're going to see that thing spike, as the market goes to some sort of low. Doesn't mean that the bottom is in. It just means you may see a temporary low. Same as buying the top, okay? Don't want to sell the bottom. All right. All right, so I'm going to wrap this up. Hey, again, I'm going to have to skip these questions. If I missed your question, I apologize. Okay, no problem. We filled the big CME. Yeah. Okay, I answered that question. All right, anyway. Yeah, so if I missed your question, I apologize. Let me just see what else we got here. Okay, no problem. Great people in Odessa. In Odessa? So, okay, you said that Intel, real things, Amazon, but not Bitcoin. That was my point. Bitcoin is real. You can't calculate it. Oh, okay. So yeah, look, Bitcoin is some type of store of value similar to gold. Sure, it's a thing, okay? And it has been proven as a remittance tool and a way to store value. Those things are true. And also Bitcoin's got the name recognition. It's the first on the block. And that's why it's like Coca-Cola, right? Yes, Bitcoin is real in those terms, but Bitcoin is not a company. It doesn't produce anything. Okay, you can't get paid for being in Bitcoin. It's just a store of value. It's highly speculative. So as long as it's in that category, it's like a penny stock. Okay, it's going to be affected the same way because speculative money is not going to have an incentive to go into it. Right? That's what we're seeing. That's why Bitcoin is getting beat up. And that's nothing new, right? As long as rates rise and all that other stuff, speculative assets like Bitcoin, like altcoins, like penny stocks, anything that requires, speculative money or anything that requires borrowing a lot of money, they're going to suffer, right? So if all these companies suffer and everything, all that money's coming out of the system, right? They start laying off people, less money. It's like a cycle. Okay, so we can argue all day long about how Bitcoin is real and Intel is real and blah blah blah, but Bitcoin is it's a speculative high risk store of value. And if you want to compare that to Intel, it doesn't compare because Intel is a company. They produce products. They pay you to hold on to the shares, right? They employ people. They spend money on research, right? They're an entity that contributes to the economy in a big way, right? All these big companies. So you can't compare something like Bitcoin to something like Intel. It's like saying gold and Intel are the same thing. Gold is a physical thing, store of value, right? And it has some valuable properties, but it's not Intel. Okay, so anyway, I'm going to wrap it up. I'm going to leave you with that. Okay, thanks you guys for accepting. Okay, cool. Romania, we have a lot of fellows from your country. Yeah, oh yeah, a lot of people have been going to Romania. That's where all my people are, Romania. All right, you guys, I got to wrap this up. I've been talking way too long. I'm way over. So if I missed your question, I apologize. I see pound yen. Again, you have the Bank of Japan with their interest rate announcement coming out this week. Be aware of that. I mean, that's going to affect things. Those yen crosses are generally, a lot of times, they're a reflection of the stock market to begin with. A lot of them. All right, at least they used to be more correlated. A lot of these things are correlated. So anyway, so I'm just going to leave you with the Bitcoin chart here. So I want to thank you all for spending some time with me here today. I hope you got something out of this stream. I know I've been talking too long and I'm supposed to wrap this up further sooner. But again, I want you to come away confident. I want you to come away with some perspective and some things to expect, okay? I hope I've done that job and you have some idea of what scenarios are realistic and what are plausible, for the markets that you asked me about. And I hope I've given you some sense of context, because you need that context. Context goes beyond everything. It goes beyond a trade signal. It goes beyond the RSI, right? Context. That puts everything into perspective. So I hope I've accomplished that. That's my goal of these things. Okay. So, okay, no problem, you guys. So again, thank you all for for spending some time with me today. Like I said, I stream every Monday, so check me out. If I missed your question, check me out next Monday. Enjoy the rest of your day, or the rest of your evening, wherever you are in the world, and thank you so much for watching.